Hey everyone, welcome to the weekly review. Last week we had continuation in the drop. Didn't think we would go this low, but got a bounce in the low R area of the broadening formation, which is what I expected if we would have gotten that low. And Friday, even though we had a VIX crush, we didn't really go anywhere, which kind of points towards another push down, a last one before we go back up. And I thought we would get rejected at this midpoint and then hold here. This might still happen, but again, because it kind of looks weak with the VIX crush that didn't lead to any kind of gain, is I kind of expect now that we go something like this. We do a retest, we probably push below 465 for a bit, and then we bounce higher. And individual names are pointing to this, especially mega caps. I'll show it in a second. One important level to be aware of all year, or at least in the first half of the year, is the 2024 open. So this was a 2023 high. We opened below it, and the quarterly open slash yearly open is always very important because it's a huge acceleration deceleration pivot. For example, how I see things playing out, if I actually see things playing out like this and we go to 480-ish, but if at some point we lose the 2024 open in the next couple of months, like in the next month or two, we're gonna get a flush down. Like next time this level is lost, I would expect we accelerate down quite substantially. Like the minimum we should see is like 460, but probably even more, because it's consider this level as the baseline for the year. And even though this is in the past, we went above it, went below it, recaptured it, try to make new highs and even made new highs to say that we actually make new highs, and then we couldn't hold them. So tried once, tried twice, tried three times to go above it and failed every time. The third time we fail and go below the 2024 open, we're gonna see a flush, not this slow drop, barely drop half a percentage point each day, kind of thing, but more like a flush like we see in bear markets. It's not gonna take a long time, like I think at maximum 2 3 weeks, but it's gonna be fast. We're gonna get out those 2% days, 3% days, maybe a couple of them in that interval. And the reason why we can go up quickly and make new highs is because it has the same effect on the upside, and we can use the same logic in on the way down. Like we try to push below it once, try to push below it twice, try to push below it a third time. Now we're gonna see a slingshot effect, and we get our momentum, and it's gonna push us all the way here to make new highs. And if this reverses and we lose the 2024 open, we're gonna flush down. That's kind of it. On the daily, kind of have a lot of levels here. Not that interesting. Um, this still looks rejected, like red candle. Try to go up rejected. Try to go up rejected. One other reason why I think we can go down one more time to just below 465 to fake out some bears and gather more energy. And there's quite a lot of precedent for these types of moves. Um, for example, I'll even take here. It had a very similar setup. We one leg down, second leg down, and at the end of this leg, we had a bit of a bounce, had a bit of a bounce, had another bit of a bounce, but just failed. And we had one more push down on a bullish divergence, and it did make a new low, like I think we will do next week, but it got quickly reversed and then became support, and that we just went up after that. So basically, the current low is, I think, is going to get undercut, and I'm gonna use actually let's say it's this. So the current low is gonna get undercut or at least matched. Uh, and then once we go back above this level, which we never close below, even on the hourly. So this is, I think this is the level that is gonna get undercut actually. Let me undo. So this is probably the level that's gonna get undercut. We retest this area here and print a new low with closing below this. And after that, once we close above 465, 66 actually, we're not gonna look back and gonna keep going up and up. That's kind of the reasoning. And this is just an example. I can probably find more if I look. Let's see, add this low here. What's this? This is October 2022. No, I want something more recent. Something like this. Like we went down. We thought we bottomed here, went up a bit, then undercut, went low, undercut it, and then bounced and didn't go below that level, consolidated under at this level for a bit, and then went up. So, like I said, this is the what I expect to happen next week. We have another push down early in the week. We undercut this level of 465.80, 466, let's say, and go probably slightly below 465, and then bounce and go up until OPEX. Uh, how I drew it here is until Wednesday, the Wednesday which is January 17, because that's the expiration. So third Wednesday of the month, and this kind of moves lose momentum on the expiration when the expiration is the same week as OPEX. So I would expect to go up till around the 17th, maybe 16th, maybe 17th, and then stall or reverse as of the 18th, 19th. So 17th probably. So that's kind of it with SPY. Let's look at mega caps a bit, and we have Tesla, which has sort of a fake breakout setup, but for now it's holding the AV up from the low uh, because market is probably going down a bit more. I think Tesla will do the same, go to 230-ish, maybe not. Uh, yeah, Tesla being Tesla and acting a bit different than the market, I can see it still hold here, but maybe go to 245 again and then bounce. But Tesla is just a small name relative to Apple. Which Apple? Let's look at where it is. So RSI is just below oversold, slightly below. This is generally where Apple bounces. We have a bounce here at this level, we have a bounce here at this level, bounce here at this level, bounce here at this level, and so on. Like it's visible with the naked eye. When we hit the oversold on Apple, we usually get a bounce. And in this scenario, the bounce is the previous all-time high from 2021. So I think this is an extra bonus for uh, a potential bounce in Apple. How this plays out is again with a bit more consolidation here. Maybe we bounce here, maybe we push it once, but something like this should be plausible for early next week. Nvidia is preparing for a big move. We have this pennant here, and I think it's going to be to the upside. We have that breakout above 510 or 500. What's 490? A breakout about above 500 that takes us all the way to 550, which is the target of the channel, and just in time for hitting the top of the channel again for a major pullback back to 450 post January OPEX in theory at least. But again, another name that is sort of pointing towards an upside breakout and a push up. If Nvidia and Apple do well, the whole market does well. So that's the reasoning with that. Google with a fake breakout here as well, but now it's retesting the trend line, and I would assume it would hold as well and should see a bounce. Amazon, the previous breakout level is potentially a support now. I don't know, but just another name that has a similar look as the other ones. I think it should bounce in this 140, 144 area, so there's still room for another push down, but I think at 140 it's a buy. Microsoft with its own pennant, let's do something like this. I don't see it break it down yet. This is what is it called? A curving RSI pattern. So RSI corrected, but price didn't. This is bullish. In general, RSI has gone down low enough and is preparing for a reversal. I think if I add MACD, we will see something similar. So we are going down, a bit of a reacceleration down here, but I think it's gonna curve up and it's gonna bounce on zero. The zero level on MACD is an important level, and we usually see bounces or rejections of the zero level. And Microsoft is getting to this point. Let me see if I can find an example of this. Not of MACD, but of the RSI correction and another level. This would be it. No, not this, that one. I can find it on easily. I have to look for it. So doesn't really matter. You have to take my word for it. This is a bullish formation where if RSI corrected and price did not. On the same kind of note, Meta looks like a bounce on the previous breakout point of the rising wedge. Can still go up. Would be a target of 380-ish if everything starts going up next week until OPEX, and that's the previous all-time high. Netflix, some more similar to Microsoft, so it has room to go up again. Not a lot of room because I think this trend line in RSI will act as rejection, but it will be enough to give us a second divergence, which will be a very good indicator for a short a bit later on. So I still think this will happen, but we move it forward just a bit, and I think it will play out like this when it does. Okay, so nothing really to see here, short of a inverse head and shoulders. Let's say like this. Tilted one. Uh, I am not that interested in playing energy long term. For short term moves, sure, but not not that interesting for the long term because uh, it's at risk of recession, and if we get recessionary prints, then energy will get hit, and that's kind of it. Okay, last thing we look at is TLT, which had a bit of a correction. I'll use the 20-year because it has a better chart, and we are getting into a bit of a resistance here. When we broke down here, it's a supply zone. Uh, and while I think yields should go a bit higher, they should do that more with a bit more consolidation before a significant move up. I think the possibility of having a V reversal in yields, like this is a V reversal, not even that high, but even just up to here, let's say, is virtually zero. And what needs to happen is something like we had here. And we are at the level where I expect to get a rejection. Uh, and next week we have CPI on Thursday. I think the print will make yields go down again, would allow the market to go up, and maybe we get a bit more consolidation here in this, let's say 4.4 to 4.15 area before we get any type of big move up in yields like we did here, because we need a bit more clarity in what's going to happen with the economy. So until that clarity materializes, this is probably what will happen with yields, and yields going down because of CPI will give the market a bit of breathing room and allow it to go up. This is the reasoning for this. Yeah, that's kind of it. DXY also giving me the same vibe. Like I think DXY goes higher, but it will go lower before it goes before it goes higher. Lastly, Chinese names, which my last prediction was that I don't see them as strong. I see them as a bit weak. And we have Chinese CPI next Friday. I would I will go long again China names if this is not such a bad print, like minus 0.7 inflation rate for December is horrible and speaks of economic slowdown. So I will wait. I tried getting into various positions, but getting stopped out, and I didn't really like it. So I'm waiting for a flush down, a lower low, maybe something like this. I think I explained in one of the previous videos, like look how Baba was the previous time, and it was at a historic low, and even at that historic low, it still had a minus, I think 19% day from uh, from the peak of the previous day. So this is minus 19, yeah. So this was the low at that time. And I think we have a setup similar to this now, in which we need a big day uh, that sets a bottom, like a high volume, either at these levels or lower. Like it doesn't have to go 20% down like last time, but I want to see a high volume day that doesn't move price. Like for example, no, these are the ones. But this, like I said, this doesn't have to be minus 20% day. It can be like a minus 5% day, but the volume pattern has to be the same. I want to see volume that signals intense selling pressure that doesn't move the price, or intense selling pressure that moves the price, meaning a minus 10 plus percent day, uh, something like this. But this time it wasn't a bottom. What was this minus 9%? Oh, it was earnings. Yeah. I think we're close to the bottom, but not quite there yet. Yeah. That's it for this week. Have a good one. Bye bye.